All right, welcome back for the episode of Carnivore Trades. Today is Monday, June 12th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here ending the day up just under 1% here on the S&P. Triple Qs just being given a free 1.7% on the day and filling that gap at 360 here. Right in the middle of the day or towards the afternoon, there's that 360 gap right there. But right in the middle of the day, really actually towards like 2:30, we just got like a 0DT call buying frenzy. Almost makes me feel like the CPI was leaked a little bit. So again, tomorrow we're expecting 4.1. Maybe it comes in softer than expected. Maybe it comes in Goldilocks. Either way, that anything that's not super hot or very, very cold would be, obviously favorable for the market, it's likely. And then, of course, we have the FOMC rate decision and Powell's testimony at 2:30 Wednesday. That's going to be the big one. Tomorrow's move will be kind of lesser because it's really all about what the Fed does and what the Fed says. Obviously, a pause for this meeting is priced in and fully expected at this point, which makes it kind of interesting that we're just seeing this kind of rally really kind of come out of nowhere in the afternoon. Is it just the last bears kind of capitulating here and jumping on? It could be. Again, like I said, it could just be CPI is leaked and somebody knows they can make a quick dollar off it. Either way, it wasn't really the most broad-based rally. Still, right? So we were still kind of in that mode here. It's still very big tech led. I know Oracle, I think they got upgraded today. That was up big, up 6% here. That's at a new all-time high there. Apple was up nicely here, up 1.5. Still no new high there, but a big day there. Tesla was up a little bit, up 2%. So again, kind of the big tech show again. Russell 2000 was green here, up 45 basis points. So still kind of inside of that green bar from Wednesday. But, despite industrials and, I think some other XLY. Yeah, XLY was up decently. The Russell was still not able to kind of make a new intraday high because the KRE was down. And there's, a lot of regional banks in there. And KRE actually lost that green bar there. Nothing terrible, but still could be a consolidation pattern. But again, still not seeing like every sector green here, which isn't, necessarily the worst thing in the near term. But either way, we are seeing some euphoria start to creep in here. I know, everybody's saying there's too many bears out there. If there's too many bears, where's the, they're certainly not positioned bearish, at least not now. But either way, triple Q's here filling that gap. Spiders getting a close above this double top here, so we'll see if that has a chance to confirm it tomorrow. Again, I don't think tomorrow, I'm not sure what the market wants to do. I would have thought that if we were kind of like neutral to sideways today, tomorrow could have been something similar, maybe kind of an inside day. The last several CPIs have not been that market moving. Tomorrow's might be, we'll see. But given the nature of today's rally, I'm not sure what we want to do. I'm not sure if it wants to gap up. I'm not sure if we want to have an inside day. Obviously, like I said, Wednesday will be kind of the big move here, and the big data point rather, and then Thursday to see the follow through. Now, don't forget too, and this is very important, that we have quad witch OPEX this week, and this morning I noted that. Like, you take a look at kind of the intraday here. So spiders green all day long. DXY, gapped down but rallied up pretty nicely. The VIX here, that was up. Don't make too much out of that. That was a calendar thing on Monday. But if you look at the VIXY was green pretty much, most of the day, or at least flat. Normally, I would say these are some distortions here. And yields, take a look at the long bond. This was all over the map here, and the markets weren't kind of moving off this. A lot of this, to me, is just OPEX related, especially being a quad witch. So we've got commodities, stocks, bonds, everything expiring this week. So there will be some distortions. You may see the dollar up, the market's up. You may see dollar down, market's down. So that type of thing. Don't be surprised if we see that. Certain correlations break down a little bit here. We want to be still pretty neutral. There's a lot of data coming out this week, but I would think until Friday, they're probably going to want to keep the market held up. That doesn't mean we can't sell. Doesn't mean we can't come in. If you'll recall, August, we did sell off the highs, but then we didn't get downside until the following week, really, real downside. And then we got the big leg down after that. So there's, a possibility that they keep us held up. In fact, I think it's more likely than not. But again, Wednesday is going to be what it's all about here. Does the Fed pause it? Yes, it's likely. What's the market's reaction? Oh, is it fully priced in? Do we hard sell afterward? Do we gap down Thursday? That's going to be the big question. But as of right now, it's hard to make too much out of this price action. But it does seem like there is euphoria starting to creep in. We had the Barron's article over the weekend. I'm sure you guys seen it. I'll just pull it up. But this is, this is what it looks like, especially when the market is vertical. The Qs are up like 15% in the last 4 weeks. The bull is back. Why more stocks could join tech leaders? If it was a bull market, then the most risk asset, the ARKs of the world, this would be leading from the beginning, if you ask me. Now, I think the best way to describe this market is a cyclical bull inside of a secular bear. So again, I'm not denying, obviously, that we've rallied, but that to me, the fact that these kind of growth names, like they should have been leading from the get-go. But either way, that's kind of a little bit getting ahead of ourselves. But either way, markets, they're green today. We'll see what we do tomorrow. Obviously, the CPI number consensus is 4.1. We don't really care. We just want to see the market's reaction after it. But either way, 52-week closing highs there for the spiders. And by the way, the futures here too. We gapped up here with the rollover, and there's a pretty good gap there. So if we do head to the downside, that would be kind of a target there in the short term to see how we get a reaction off of that gap fill at 40, right at 4,300 there on the ES. So something to just keep an eye on there. All right, Dow here, DIA. That's pushing up. Remember, we've been looking for 343 there for a long time, and looks like it's poised to get there, so we'll watch that. Going into the end of the week, Russell 2000, I still think that wants to get to 190 to 192, so again, that pattern's not necessarily broken. It's just a little overbought and pulling back. If that 20 MA catches up, it can get up there for sure. That's really all the upside I've got penciled in for it. Right now, semiconductors were higher today. NVIDIA, again, just kind of getting that invisible bid. Look at this, just sideways, and then all of a sudden, just a call buying explosion in the last hour or so. But semiconductors holding up right into that little double top area. IGV made a new high again. Oracle doing a lot of the legwork there. Dow Transport's here. Nothing terrible, right? Decent little inside bar pattern starting to build up. But again, a laggard, right? You want to see. This is kind of going back to my point earlier. I want to see the transports leading. They haven't made new highs since February. It's just not this type of price action that we're supposed to see here. Again, doesn't mean the market can't go higher. You have to respect the tape in the near term, but these are things that are structural problems moving forward. XHB, that made a new high as well, so nice move for home builders. No new closing. It did make a closing high, but it didn't close above last week's high. But either way, XHB holding up well. That can still get to 77. ITB, that made a new closing high as well, just shy of 80. No new nominal high on a closing basis, though. And then VNQ, inside pattern there. If that consolidates, you can get to 85.50. Nothing's changed. XLF, red on the day. Again, we talked about that. Down just a penny, but still red on the day. And again, there's been some kind of underperformance in certain sectors, right? I think a lot of that's OPEX related. Energy got hit pretty hard today, though not all energy, right? So crude did take a hit. Nat gas was green. A lot of the energy stocks, though, were down. But XLF here, again, still weekly bear pattern. Watching how that reacts to the 20-week moving average. Moving forward, KRE pulling back here again. This can still maybe get to 46, but I think it's got to consolidate a little bit more. And then same thing there with KBE. That can get to 39 and change if it consolidates further. XBD here, no problem, just a pullback day here. If this consolidates, we'll have to see. There's a lot of supply up here, but not the worst pattern here, but it's got to do more backing and filling. All right, over to energy now. Crude taking a dump. This is headed down to probably 64 here. So it looks like it's going to, we only got like 45 minutes left for this to close back above 68. And again, look at here. So high, lower highs, and you got kind of like short-term lower lows here. So this is definitely on the weaker side. Not in love with it here. You got to hold 64, otherwise it's really down to 60 and then 50 ultimately. So crude definitely soft. Maybe again, CPI kind of front running that. XLE. Technically, by the end of the day, you did close back above this green bar, so still technically inside of that pattern, or inside of that green bar, so not broken. But energy did take a hit today. I'll put our trend lines back on here. And again, resistance is still going to be right in this area here, 82.72, we'll call it. Not a terrible little short-term pattern here for a pop, but on the weekly, just be careful. You got a lot of red, big red bar here, and then you're inside of that. But the trend is up, so there's your positive. XOP, that did close below Wednesday's low, so definitely on the softer side. I wouldn't do anything with this one right now. And OIH, taking a pretty big fall, down 2.5%, closing back below the 50 MA. That still has resistance at 280. Again, I wouldn't do anything with this either. So anyways, nat gas all over the map. It gapped up in the overnight last night and then went negative, and now it's back green, so nothing terrible there. Still just kind of in this holding pattern. We'll see how that behaves going into next week, or I should say tomorrow. Dollar index there's our yield chart there, the 2-year yield. Oh, we forgot to talk about yields. 2-year yield actually held up pretty well. It did pull back here, but again, this is not a terrible pattern here for an advance. You get above this level, it's going to 5%. Everybody thinks the Fed's going to cut. If it gets above 5%, they're not going to cut. 10-year, again, your resistance here is the short-term area. Not a terrible little inside bar pattern there as well. Then the 30-year, same thing. So above 4%, this goes higher. But either way, dollar index, that was red earlier, went back green. Again, no problems. I think the weekly time frame is set up pretty nicely there. I like that green bar pattern. Anyways, let's get over here to gold. Okay, so there's gold futures. Nothing really doing there. There we go. So gold futures, nothing really doing here. Again, still hanging in there by a thread on the weekly. Again, as long as you're above the 20-week moving average, no real problems. If you break that, it's down to 19. Silver here, inside day, down 1% though. Nothing terrible. If this flags, this can go higher. So just be aware of that moving forward. Platinum, that backed off right into the 200 moving average. This is just doing a lot of backing and filling here. And then palladium here, that did turn around and go green. We'll see how that does. It really needs to reclaim 1400 here, but not a terrible level. I'm still watching that one. Copper, this is starting to go sideways, so this might be setting up for a move to 390. If you lose 370 though, it's probably back down to 360 though, so just be aware of that. All right, lastly, Bitcoin. We finally have an update here with Bitcoin. So we did break that 20-week moving average on a close too. So you can see we just closed below it. That does do some chart damage to me. I know I've said it's probably cooked if it breaks this, but it's not the worst pattern here still. But you have a red bar there, wide range red bar, and you're inside of that. Now you're inside of the bigger green. That's true. Nothing's broken yet, but I would have preferred to see a bid off that 20-week moving average. So I'm kind of getting neutral to bear here. By the way, the COT is really bearish for this. Retail mega long, commercials mega short, and they added more shorts last week. Just something to consider here, but it's holding up for now. Nothing really terrible, but I don't like that weekly, and I don't like how you got that nice reversal last week and then you couldn't follow through with it. So again, just be careful with Bitcoin here. Definitely showed a little bit of weakness on that weekly time frame. All right, lastly, back over to the spiders here again. Tomorrow, big number, 4.1 is the consensus. Really hot print is going to be really bad. A really cold print is going to be really bad as well. Market's looking for its favorite, Goldilocks. Again, and then obviously Fed, FOMC Wednesday. Again, don't forget, it is quad witch. Expect distortions. Don't trust breakouts and don't trust breakdowns in either direction in this market until Friday is over with. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. Talk to you all tomorrow.